You're looking outside the unity meeting which took place between Donald Trump and Paul Ryan. We expect Paul Ryan to address reporters in the next hour, maybe about an hour from now. The meeting is over. Maybe Speaker Ryan is trying to figure out exactly what he is going to say. Reince Priebus has pre-tweeted out saying the meeting has gone very well, making progress towards unity. Look who's here. Gillian Melcher is with us, Heat Street political editor. You don't think that Ryan has to come out and say anything about unity at all?
No, I don't think he has an obligation to do this. I mean, it is the most establishment line that you can take, that now that Trump is the presumptive nominee, even if you disagree with him in principles, too bad, get in line. That's the very attitude that conservatives have been bucking for years, have been frustrated with for years. I'm glad he's standing on principle, and I think it's up to Trump.
We don't know whether he's standing on principle at this point. We don't know what Paul Ryan's going to say.
Yeah.
But you say he should stay on principle.
Yes.
And not come out and endorse Donald Trump.
Unless he thinks that Donald Trump is going to pursue a conservative agenda, which I think not just he, but a lot of conservatives are questioning right now. I mean, he's gone back and forth. I think you can find opposing viewpoints within things that he said within the past 6 months.
Maybe so. But Trump is the candidate.
He is.
Trump's won the vote. Trump's brought all the new voters into the party.
But he's isolated a lot of old voters, and I think it's up to him at this point to unify the party.
Really?
Yes.
You think it's up to Trump to go the extra yard as opposed to Ryan to go the extra yard? Really?
Absolutely, absolutely. It's separate branches of government.
I
am.
Oh, really?
Yes.
You don't think that Trump is a conservative?
I'm deeply skeptical of Trump being a conservative.
Another note from this source of John Roberts inside the meeting to describe the tone between Ryan and Trump as, quote, no BS, very helpful.
That's interesting.
No BS, that means it was frank.
Yes.
In other words, maybe it was a little harsh. And I don't want to read too much into it.
We can speculate.
I should not do that. Okay.
No.
Gillian, stay there.
All right.
We'll talk to you in a minute, okay? To the markets, please. The Dow Industrial Average is now down 2 points. I can call it dead flat. The point is, it's at 17,000. I repeat, 17,700. David Dietz is here. He's a market watcher. And you know what he's saying? He says the Dow Jones average is going to 19,000. Make your case and give me a time frame.
I think we can get there by the end of the year.
End of this year?
End of this year.
6 months away.
Exactly. And the reason, quite simply, is look at interest rates. We're at 1.75 in the 10-year Treasury with a 2.25 yield in the S&P 500. So stocks are rarely offering a better income than bonds themselves. At the same time, of course, there's such skepticism. You know, bull markets don't die until there's euphoria. We're wavering between skepticism and optimism. We're not anywhere close to euphoria. So I think that's where the flow of money is going to go. And finally, some of the headwinds in corporate earnings, which are critical. That's been low energy prices, and that's been a strong dollar. But what's happened this year? Energy prices are rising, the dollar's going down. So that should make comparisons in the second half of the year much better.
David Dietz, Thursday, May the 12th, 2016. He says 19,000 on the Dow by the end of the year.
Make a bet.
We all make bets when we put our money in the stock market.
There you go. Yeah.
There's a bet.
There you go.
Next one. A theme we've been covering. It's on this show. The retail ice age. Here's part of it. Kohl's department store chain. Look at it go down today. I can't read it quite. I've not got my glasses on. 9%.
Yeah.
Okay, that fits the pattern here. Department store chains going down, down, down. Now, David, you say 19,000 on the Dow at the end of the year. Okay. Would you buy any of these retail stocks? Any of them?
You know, I think you need to be cautious there. Here's their problem.
That's another word for no.
They don't have the online presence. They're not keeping up with the exclusive brands. And the prices are too high. People are spending. Wage growth is up. We basically have full employment.
Much.
Gas prices are down, but they're going to the Amazons. They're going to the TJ Maxx's and H&M's for the exclusivity. So I think they're going to have to change their tune a little bit if they still want to be competitive.
Okay, so the short answer to my question to you is no, you're not buying any of these department store chains.
I think there's a little bit more downside to go.
Don't give me this, oh, I'm cautious. Don't give me that.
I gave you the strong 19,000. I'm being cautious.
Yeah, you did.
On the
Backing up. Gillian Melcher, still here. You're a millennial.
I am.
This raises an interesting question. Where do millennials shop?
Well, I think they tend to shop online a lot, but it's not just an issue of shopping. If you look at it, millennials are saving more than other generations. And also there was a study last year that looked at 75% of them would rather spend on...
Wait a minute. Millennials are saving more than any other generations. I thought they were mired in student debt.
They are.
Can't get well-paid jobs. You're telling me that they save more than anybody else?
They're still saving 5% of their income storing it up.
How do you know that?
Well, that was a bank rate study released, I believe, earlier this year. And then on top of it, there's a study that says 75% of millennials prefer to spend money on experiences rather than shopping. I know I like spending my money on travel, although I do a bit of shopping.
You've confused me this morning. But we'll get back to you.
Okay.
Stay there.